All right, let's take a look at something crazy. Ticker symbol ZIM has a dividend yield of 109%. Now, how is this possible? So, ZIM is a shipping service company, and they announced a dividend yield of over 100%, which is pretty nuts. It's definitely not sustainable. It is a dividend trap, so definitely do not buy into the stock thinking that you're going to be making 100% yield in dividends every single year because this is not sustainable at all. So they announced $27 per share annually, making quarterly payments, and that is more than the current stock price of $24 per share. That's pretty crazy in my opinion. Every year you would be getting essentially one free share of ZAM. But of course, this is not sustainable. And I am warning you guys not to buy into this stock thinking it's going to be a great investment. Now it could play off big if it if it does, but if we take a look at the dividend history, it really is not reliable. It did pay out a $17 dividend in 20 March of 2022, but as we can see, the stock price it went from all the way $84 per share. And this was all the way back in March 2022 when they announced that $17 per share dividend. So it's definitely not sustainable. And the stock price right after it paid out its dividend, it dropped heavily. So we could see another huge, potentially huge drop for ZIM. And we can play options on this stock, playing puts right after the dividend gets paid out. And the dividend is going to get paid out, I think it's November 27th. So we can play out some puts on this stock and potentially make some money. Now, obviously, it's going to be pretty risky, but seeing what happened prior to their last dividend payout, we can assume that this stock will drop a little bit after its dividend payout. So we could do something like a December 9th expiration date. Even a December 16th expiration date would be pretty fine. And yeah, we could spend maybe a few $100s on some puts. Um, don't invest anything you're not willing to lose because buying options is pretty risky. But this is the only way to do a bearish position. Of course, you could do some debit spreads or some credit spreads on the stock, but I do think some puts could pay out pretty big, and it's going to be a little bit of a gamble, just because when you're doing a regular put, your max profit potential is it's almost unlimited as long as if the stock goes to zero, which is not going to, that's going to be your max profit. So you can make a pretty big return on this stock right here. So 110% dividend yield, that's pretty crazy. Price earnings ratio of 0.50. So this is a pretty sketchy stock in my opinion. But it is a very profitable one. But they haven't been doing well, mainly because of the pandemic as well as the recession that's coming up. And that's just bad news for especially shipping services. UPS, FedEx had to lay off employees, Amazon as well. So it's not looking too good, and we're going to be playing some puts on the stock and potentially make some crazy amounts of money